Ladies and gentlemen, good day and welcome to Purvankara Limited Q3FY22 Earnings Conference Call hosted by Emkay Global Financial Services. We have with us today Mr. Ashish Purvankara, Managing Director, Mr. Vishnu Murthy, Senior Vice President, Risk and Control, Mr. Abhishek Kapoor, Executive Director, Chief Executive Officer and Chief Financial Officer, and Mr. Neeraj Gautam, Executive Vice President, Finance. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ayush Bansal from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I would like to welcome the management and thank them for this opportunity. I shall now hand over the call to Mr. Neeraj Gautam for the opening remarks. Over to you, sir.
Thank you, Ayush. Good evening and warm welcome to all of you. I hope you and your families are staying safe and doing well. Thank you for joining us for Purvankara Limited's third quarter FY22 earnings conference call. My name is Neeraj Gautam. I am Executive Vice President Finance of Purvankara Limited. The quarter's presentation and financial results ended December 31st, 2021 have been uploaded on the stock exchanges. I will start with a brief update on the business and highlights for the quarter and 9 months. Following that, my colleagues and I would be delighted to answer any questions and you may have and take suggestions you would like to give us. The Union Budget presented earlier this month promises to be a growth-oriented and future-forward budget that is expected to develop the country's economy, infrastructure and logistics. The thrust on capital expenditure, which saw a substantial hike of up to 7.5 lakh crores in FY 2023, will play a significant role in boosting the overall economy, and that will create a backdrop of opportunities for the real estate sector. The announcement towards investment for urban planning and urban planning is encouraging the states to adopt unique land parcel number will deliver structural changes that will help unlock the sector's long-term potential. Allocation of 48,000 crore towards the PMAY program shows the government's determination to boost affordable housing. The central government's thrust towards digitizing land records will bring transparency and ease of doing business. The residential market has been recovering with a strong sales momentum in the last few quarters. The resurgence of homeownership is continuing even after the second wave of COVID. In markets like Bangalore, Mumbai, the government interventions through waivers and stamp duty concessions improve the demand further. In terms of our performance for the quarter, we have completed the quarter with a steady momentum in sales. During the third quarter FY22, our sales value has jumped to rupees 666 crores, an increase of 17% on year-on-year basis and 12% on quarter-on-quarter basis. The area sold stood at 0.99 million square feet, up by 9% compared to 0.91 million square feet in Q3 FY21 and Q2 FY22. The sales realization have also improved to 6,727 rupees per square feet. This is an increase of 10% compared to Q3 FY21 and 3% compared to Q2 FY2022. We sold 690 units in the quarter, which is an increase of 4% compared to the previous year and a rise of 10% on sequential basis. Coming to the financial performance for the quarter, consolidated revenue for Q3 FY22 was INR 246 crore compared to INR 304 crore in the previous year's corresponding quarter. Our EBITDA for the quarter was INR 86 crore compared to INR 116 crore during the same period last year. Total comprehensive income for the quarter stood at INR 1.65 crore compared to a total comprehensive income INR 12.75 crore during the corresponding quarter in the last year. In terms of our 9 months performance, we sold 1,616 units corresponding to the volume 2.32 million square feet. sales value grew to 1,576 crore, which is 9% higher than the 1,449 crore on a year-on-year basis. The sales realization also improved to 6,795 rupees per square feet from 5,989 rupees per square feet last year. It is an improvement by 13%. In terms of our 9-month P&L performance, we have achieved a good improvement in profitability metrics. For 9-month period, our total revenue from operations stood at 1,060 crores compared to INR 714 crores for the similar period previous year, implying a year-on-year growth of 48%. Our EBITDA stood at 576 crores compared to INR 263 crores for a comparable period previous year, implying a year-on-year growth of 119%. We are also conscious of the increase in input cost. Construction cost is 40 to 45% of our sales price, and an increase in sales price mitigates the consequential impact. On the business development front, we are continuously evaluating opportunities in cities where we are present. We are delighted to update you that we have invested in Messrs. White Oak, a partnership firm, to acquire 85% of development rights of 11.25 acres of land in Bangalore KIDB area during the quarter. The estimated development potential of this project is 1.40 million square feet. Secondly, we entered into a joint development agreement for a premium residential development of 3.85 acres in Magadi Road, Bangalore. The estimated development potential of this project is 0.54 million square feet. Both these projects are under design and approval stage and will be launching these projects in the next 2 to 3 quarters. Further, we are pleased to update you that we are continuously optimizing our debt and reducing our cost of debt. We have reduced our average cost of debt to 10.51% from 12% a year ago. Our net debt at the end of Q3FY22 stood at 1,857 crore compared to 2,372 crore at the end of Q3FY21. The net debt and equity ratio stands at 0.89 compared to 1.25 a year ago. We are on cash flow management front. We are consistently generating cash surplus from our operations. Our operating inflow almost doubled for 9-month period. It stood at 1,656 crore compared to similar 9-month period a year ago, 848 crore in FY 2021. We generated an operating surplus of INR 754 crore during the 9-month period. The balance collection from our sold units stood at INR 2,278 crore on December 31st, 2021. The value of our open for sale inventory is INR 4,652 crores. As against this, we need INR 2,692 crore to complete our all inventory open for sale. It will result in an operating surplus of 4,239 crores. Besides this, we have not opened for sale inventory in existing projects with an estimated surplus of 1,993 crores. On new launch front, we wanted to update you that we have launched 2 projects during the quarter. Tivoli Hills, a premium plotted development project in Bangalore, and Palm Vista, affordable premium residential housing project in Mumbai. We continue with the focus on the launch pipeline. We have 22 projects with a development potential of over 18 million square feet in our launch pipeline in next 3 to 4 quarters. All these projects are at various stages of approval process and are on track for their scheduled launch timelines. We are encouraged and excited by the trends emerging from the quarter. We are also preparing the organization for a new and sustained growth trajectory and gaining market share across our key residential markets. The return to Mumbai, the expansion in West market, the sustained launch program across our key markets in all our 3 brands, all these augurs well. Importantly, we have taken concrete steps to ensure cost optimization, contract management, and operational efficiency. All these are likely to bear fruit in the coming quarters and indeed years ahead. With this, I conclude my remarks. Thank you all for joining the conference call. We're now happy to answer any questions, comments, and suggestions you may have.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ritesh Seth from Motilal Oswal. Please go ahead.
Hi, good evening. Thanks for the opportunity. Firstly, on the launch pipeline, so very strong pipeline for FY23. So there were a couple of projects which are pushed out from Q3 launch to Q4. Okay, and so overall, in terms of launches, how confident are we in terms of launching these projects? Because there are few of your peers are facing issues in terms of approval. So just wanted to check, how many launches actually we can see coming in next couple of quarters.
Thank you for your question. I think on a ballpark basis, generally we are confident that at least 90% will be launched over the next 3 to 4 quarters. If I have to break them into buckets, almost 40% of the projects listed here for launches have already got approvals, and we await and have either got RERA or waiting for RERA approvals. So that 40% bucket is done. Other 40% we have already got approvals. Not for 30% we already got approvals and applied for RERA. Right? The balance is what is in the approval stage. So basis that statistics, fairly confident of at least hitting a 90-95% number in the next 3 to 4 quarters.
Right. And these Sound of Water 2 and Purva Zentek Business Park were delayed for some RERA delays or just
So as we speak, Sound of Water 2 has already been launched.
Okay.
As we speak, Purva Zentek Business Park is already launched.
Okay, great. Thanks. And my second question is on your land bank in Chennai. So I see a 4 million square feet kind of a reduction in future land bank potential. So has that land being monetized to someone, or how is it?
Yes, so this was a land that we had bought on Sri Perambudur on the Bangalore Chennai highway. So we monetized that land last quarter.
Okay, and any how much consideration, if you can share that details?
About 59 crore. We received the money.
Okay, fine. And my last question is on your partnership with Keppel Land. So how are we going to explore this partnership? Because I think we were planning for some commercial developments as well, and we were looking for some private equity partners or someone. So
as far as our commercial development is concerned, we have a potential of about 6.5 million square foot of commercial space already available with the company, for which we have started the projects and now are looking for sort of platform partners. The JV with Keppel, currently we had one commercial project and we have a residential project with which Keppel Purvankara had given on joint development to Provident Housing, which is ongoing, which has done well. The commercial project we took a call 2 quarters ago to exit that. So Keppel is taking over that entire commercial project.
Okay. And would we like to extend this partnership to our upcoming commercial projects with Keppel, or?
No. So for our 6.5 existing sort of portfolio of commercial, we are talking to other international funds.
Okay. Thank you. That's it from my side, and all the best. Hope to see many strong launches for next year. Thank you.
Thank you.
Thank you. The next question is from the line of Dikshit Mittal from LIC Mutual Fund. Please go ahead.
Yeah, hi sir, good evening. Yeah, sir, just to confirm that you have indicated launch pipeline of 18 million square feet, and you mentioned that 90% will be launched in 3-4 quarters, or maybe lower than that.
Yes, I mentioned 3 to 4 quarters. Yes.
Okay, because sir, if we see the current last 5-6 quarters, maybe this quarter also, the launch has been pretty muted. Like if you compare to other players in the similar region in terms of launches as well as sales, so it has been pretty muted performance. So any particular reason for that, and how are you confident that maybe in next 4 quarters you can launch around 18 million square feet?
So that's where I had given some color. Yes, in the past 2 quarters there were a few delays in approvals because of COVID, various other reasons, etc. But like I gave an approximate percentage to get some idea of this launch pipeline, almost 40% of the projects have already gotten approval. We have applied to RERA and some have already got RERA. In fact, 2 projects listed in here are already launched as we speak today. There is a balance 30% where approvals have come and they've applied through RERA. And then the balance is where they're still working on approvals. Based on that statistics, I'm fairly confident that we should minimum hit a 90% number in the next 2 to 4 quarters.
Just want to add what Mr. Ashish said. Besides the 2 launches which we've done in the quarter, which is Tivoli Hills, which is 1.4 million square feet, and Palm Vista, we have already taken 2 projects to the market, which is Orient Grand, which is Bangalore, and Three Heavens. Three Heavens also taken to the market, which is a plotted development under Apurva Land brand, which is already in the market at this point of time.
So under the Purvankara list, number 1 and number 2 have already been launched. Number 3, we have approvals in place. We're going to be applying for RERA. Under Purva Land, the number 5 is already launched.
Okay, but sir, in terms of delay in approval, company specific issue, or because we are not seeing that kind of delays in other companies in the similar region, sir.
I don't know what other companies are doing, but I think it's a general issue because of COVID, because a lot of officers who are responsible for approvals were on COVID duty, and therefore, certain approval and committees are not sitting. So I think according to me, it was an industry issue. There's no specific concerns on any of these projects, which is unique to the company.
Okay, sir. And sir, in terms of sales velocity, what kind of sales velocity do you expect in terms of after this launch? In how many years do you expect to monetize?
So typically, the residential projects have a life cycle of on an average of 4 years. Plotted development has an average life cycle of 18 to 24 months.
Okay. And sir, this 18 includes commercial development also, right? 6.5 that you mentioned.
Out of the 6.5, what we've just started construction on is under Purvankara. You see number 5. That's the only one they've taken to market because we had existing LOIs, etc. For that project. The other balance, I would say, the balance 6 million square foot is currently in the approval stage, for which we're looking for a fund, sort of international fund, JV partners to build a commercial platform.
Okay. And then lastly, if I see the launch pipeline in Provident, you seem to be very aggressive. So any particular reason that, because it's the kind of low price offering, right, as compared to Purvankara in terms of premiumization. So any particular reason that you're seeing demand in that project only, or is it a conscious strategy, sir?
No, so I think one is the way we look at it is these are 2 independent companies run by 2 independent heads. They're both trying to grow the business as best as they can. Having said that, yes, Provident, considering the ticket sizes, you tend to see a little bit higher volumes than the luxury. Value-wise, they probably will be the same, or the luxury may be a little higher in terms of total value of sale. But in terms of number of units, you will see a higher number in Provident.
Okay. Oh, thank you, sir.
Thank you.
Thank you. We'll move on to the next question. That is from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Thanks for the opportunity. Sir, I just want to break, you have open for sale close to 5 million square feet, and then not open for sale is again close to 5 million square feet, and then you are talking about some 18 million square feet is the launch pipeline going ahead. So, just to, ask on this front that, we have been pretty slow in terms of sales velocity in last 3 quarters, but what sort of number that you are looking at for, let's say, FY23? We might be closing this year at 3.5 million square feet, hopefully. But next year, what is the target in terms of, sale that you have put up for yourself?
One correction there. When you say 18.12 is the developable area. So that's the constructed area, to just give a sense of how large the projects are. The saleable area of that is 13.16 million. So it's not 18.12. Point 1. Point 2, on a sustainable basis, from our ongoing projects under construction, we have demonstrated we are able to hit a run rate of anywhere between 3 to 3.5 million square foot. Now, the minute you add launches to that, right, you see during the launch, and again, if you see the last 4 years, in 8 out of 10 launches, we've been able to sell anywhere between 35 to 50% of the project in the first quarter. So the quarters where you start seeing these launches come in, you'll see a big bump up.
Okay, so can we expect when you are working with, let's say, 13 million square feet, kind of launch pipeline in next 1 year, almost 40 to 50% is possible next year, or should we work with a lower number?
It's all in phases, right? Now, for example, some of the projects over here, what we are stating is the size of the entire project. Now, for example, if you look at under Purvankara project number 4, Windermere, right? Now, the total square footage of that project is 2.17 million square feet. Now, you cannot expect that we'll be opening up the entire 2.17 million square feet. I don't think anyone does that. So we will end up opening 700,000 or a million square foot as the first launch. Of that, you can expect 35 to 40% to be sold within the first quarter, max 2 quarters. So you have to look at it, you have to apply the filter of phasing.
Got it. Sir, can we expect, this run rate of 1 million square feet which you are, establishing for, let's say, Q3, so close to 4 million square feet plus is a sellable target for us next year with an average realization of close to maybe, the similar number, 7,000 rupees per square feet. Would that be a right assumption to go ahead?
I would say that's a fair assumption, yes.
Okay. And in terms of, sir, operating margins, you already, commented on the opening remarks that, 40-45% is the construction cost that, you can work with. But broadly, what sort of operating margins that you are, comfortable with, these projects on an average basis?
Once you say operating margin, it's all the cost up to the project and the sales price, we are comfortable with 30 to 25 to 30% of the operating margin. That is where we work.
At 30% plus, correct?
Yes, 30% plus. Say Provident project, maybe 25%, 25 to 30%, and 25 to 30 to 35%. If you go to plotted development project, my margin will be slightly better than the residential project. Okay.
And sir, average TAT period you have already commented 4 years for the residential and maybe 2 years for the villas and all. So on an average, yeah. So sir, if we go, I think I would really appreciate that last quarter we have requested that if you could provide some more details on your launch pipeline. I think in this presentation you have included a lot more details than as compared to previous quarters. But if you could also give us a sense that what sort of time frame, for the completion, the exact timelines for each and every project. I think you have already quoted for each and every project, and the completion timelines, if we can get a sense on that, perhaps it will be more beneficial for us to,
And Bajrang, like we met, last time, we'll again, interact and do some more deliberation offline on, more granular details, and we'll share with you.
Okay, great. Thank you very much, sir, and all the best for your future success.
Thank you.
Thank you. The next question is on the line of Varun Dia from Dimensional Securities. Please go ahead.
Hello. So firstly, I wanted to know if you could give some outlook on the plotted land in terms of margins and revenue. Hello.
So, the total potential here is about 2.3 million square foot that we have. Typically, as Neeraj mentioned earlier, the margin is anywhere between 30 to 35% in plotted development. And we are looking at, in terms of top line, we are looking at somewhere around 1,000 crores from this 2.3 million square foot.
Okay. And you launched one project in Mumbai. So would you see the average realizations going up?
So there are 2 projects, in fact, in Mumbai. One is in Chembur. That obviously the realization is higher. And the other one we are just in the process right now. We just launched, which Neeraj spoke about a little while back, called Palm Vista, which is at Sheel Fata. Obviously, that one is aligned with the typical realization, which is around 6,500 rupees a square foot. But yes, Chembur will obviously have a much higher realization.
Okay. And one more thing, your land bank is around 48 million square feet. So I wanted to just know, is anything under litigation, or what are your plans for the development?
So of that 48 million, as you can see, we are already on 13 million square foot. The rest of the lands, there's a mixed bag of subsequent phases which will come in. And also there are lands wherein we need clearances to be done and conversions to be done and so on and so forth. So those will take some time and therefore, the phasing of the launches. But to answer that question, these are all lands paid for. So I think then it's only a question of the clearances come through, the approvals come through, and then we do the launches.
Okay. Got it. Thank you.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Tirat Muchala from Elizabethia Advisory. Please go ahead.
Hi. Thanks for taking my question. Firstly, congrats on releasing a good amount. Can you hear me?
Yes, we can. Please go ahead.
So I was saying congrats on releasing a good amount of capital from the sales of, I think, Nile, Paigai and Vajishwari, right?
Right.
So one was about the sale to Godrej that we did. Are we expecting more cash to come soon? And how much would that be?
There is another 170 crores expected to come from that transaction. That is dependent upon the getting the additional FSI approval for the project, which is under process. We have already applied for the plan approval, and as soon as approval comes and FSI is loaded, then we'll get the money from Godrej.
And do you think that's a reasonable thing to happen, or might be difficult?
It's a reasonable thing to happen. That's a government norm. If it's a very much reason, that is why we agreed upon to sign the contract. The moment we fulfill that condition, Godrej will transfer the consideration.
Okay, super. One last question was, regarding this entire non-residential business that we are trying to develop. I think we've gone back and forth on the warehousing platform, and now there is something with the asset management company that we were developing. And so as investors, we struggle with understanding how to value the potential of the non-residential piece. So can you guide us on what the concrete plan is, or are we still debating it?
No, so the concrete plan clearly is the focus on Provident, Purvankara Residential, Purvankara Commercial, which is about 6.5 million square foot, and we are going to scale that up as we sign up the platform, and plotted development in Purva land. These are the four clear drivers of growth for us across the 9 geographies that we are present in. So we are very clear in our strategy in terms of what products and what markets we want to enter.
But for the 6.5 million of commercial, are we looking at some kind of asset management structure, or are we going to hold it? And what kind of timeline are we looking at?
See, the asset management structure is already in place. So we do have assets under management as we speak. But as the commercial platform builds up, I'm quite certain that business will scale up. The reason it has not scaled up is because we have not. So now with the new approach that we are looking at doing, there is a new strategy that's been put in place. We believe that business will scale up, and as it scales up, so will the asset management. And as far as the exit is concerned, since we are looking at a platform transaction, we're obviously going to hold the assets. Some of the smaller assets we may not, but most of the assets we will hold as a part of the platform transaction.
Okay, super. Thank you so much.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Suraj Navandhar from Sampada Investments. Please go ahead.
Hi, sir. Good evening. So I wanted to understand your on the debt. We have been continuously reducing it, but what is your long-term outlook for next year?
Yes. So, we have been stable as far as our debt numbers are concerned. And if you see what we have been able to achieve in a big way has been the reduction in cost of debt, especially in the last 1 quarter over 3 to 4 months. We see that further marginally getting better. But the right way to look at debt is the debt per square foot of the square footage in the marketplace. So in that context, our debt will continue to reduce because the quantum of square footage we are going to take to the market is going to be substantial. And as the sale proceeds come in, obviously, and the construction progresses, there may be CS that may be required for these projects. But having said that, I think the right context to look at is debt per square foot, and that will continue to reduce.
Okay. Thank you, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Amish Gupta from JP Securities. Please go ahead.
Yeah, hi. Thank you for taking my question. So my first question pertains to the land parcels. You already have a good presence in southern part of the India. And so, are you looking towards some more land parcels in other parts of the country? Or, if, as in, you will focus on these area itself, as in different parts of India or southern part? Can you please, give a light on it?
Yes. So we are very, very focused on south and west of India, and that will continue to be there. Our major focus is going to be between Mumbai, Pune, Bangalore, Hyderabad, and Chennai. That's the key driver for us, and we will go deeper in these markets. We believe that Mumbai will give us value per square foot to be able to, and that's also going to enable us to get higher realization per square foot and add value, whereas the square footage would be lesser. Pune again is very much like Bengaluru, so we will continue to scale up our operations there, and similarly between Chennai, Hyderabad, and Bangalore.
Okay, sir. And sir, could you please quantify the size of land parcels that will be acquired, if you can?
That's a very forward-looking statement, but we continue to be in the marketplace, and we will share the details as we go along.
Okay, sir. Understood. So my next question is, so you launched 2 projects, that is Provident Palm Vista in Mumbai and Tivoli Hills in Bangalore, right?
Yes.
So what is the saleable area and what is the kind of traction you are seeing over there in terms of, say, inquiries and bookings?
So Tivoli is total of 1.4 million square foot, and we have seen very good traction as far as Tivoli is concerned. Of the launch phase, we have already sold over 60%. As far as Palm Vista is concerned, it is about 1.2 million square foot, of which the phase 1 that we have opened, we have already sold about 35% of it, and we intend to scale up because we just launched. So we are in the process of launch at this point in time, and we will see the numbers go up. So very positive in terms of the brand and in terms of the acceptance, and a lot of excitement in the market in these launches. So looking positive.
Okay, sir. Yes, sir. That does answer my question, sir. Thank you so much.
Thank you.
Thank you. The next question is on the line of Divya Salian from Fort Capital. Please go ahead.
Good evening, and thanks for the opportunity. So I have 2 questions. The first one is, of late you have entered into the plotted development business. What is the kind of market that you are looking at in size terms?
Project development, sorry, plotted development. Are you saying plotted development?
Yeah.
Plotted. Oh, plotted.
Yeah, it's plotted development.
Okay. So plotted development, we are at, so we have a total pipeline of about 5 million square foot, of which 1.4 million has already been launched, which we mentioned in Tivoli Hills. And the rest of the projects are very, very visible in terms of launch. In fact, another project, which is Tea Haven, is already under launch. There is one more, which is South Bay, which was mentioned earlier, is already in RERA. The sanction has come, so that will go into launch in this quarter itself. And the others are already in the sanction stage. So we are very, very bullish about the plotted development because we believe that there is a huge consumer demand, and the quality of development and the way we have positioned the marketplace is way ahead of the market.
Plotted development has always, I think, been there as a thing. But fortunately, unfortunately, I think that the branded players, for some reason, were so, I guess, focused on doing apartment building, because plotted development at that point didn't look sexy, I think. A. B. Typically, plotted developments come around the outskirts of cities. And if you go back maybe 5-10 years, places didn't have the right infrastructure. All the ring roads, highways, etc. being built a lot of the outskirts land, typically where plotted development comes out, but because of infra, the driving time is not more than from city center, maybe 45 to maybe an hour. So therefore, you've seen a lot of the big brands, listed players get into it. I think it's a fairly large market. In percentage terms, as of today, as we are tracking it with the data available, I think almost 10% of the prospective apartment buyers are actively evaluating, shifting to a plotted development. For a couple of reasons. I think the emotion of owning land, I think the flexibility that you can buy land today and build your house over maybe 2-3 years, you get that flexibility. Third, I think just the sheer thing post-COVID of having a horizontal development. During COVID, people are not allowed to come out of their apartments. In a plotted development, you're able to come out, you're able to walk around. So I think these factors have contributed to that push in plotted development.
Okay, thanks. And how many projects do you have in pipeline on the plotted business, and by when these projects would be completed, and what are the where are these projects based?
So total of 7 projects across 3 cities and 5 million square foot we are talking about, and they're based in Bangalore, Coimbatore, Chennai. These 3 markets at this point in time.
Okay. Thanks.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Arun Mehra from Moneylife. Please go ahead.
Yeah, good evening, everyone. So, coming to your launch pipeline, Provident accounts for around 42% and Purva land is 22%. So, what would be the ideal mix that you would want to have in the future, with which you would be comfortable with?
So, from the point of view of square footage, we will continue to see Provident and Purvankara contribute equally up to about 40%, and about 20% will continue to remain as Purva land.
Okay, so that will continue. Okay.
Yes.
So coming to your geographical locations, 45% share is coming from non-Bangalore, like outside Bangalore. So do we see this number rising down?
Yes, very much. We see this number rising, especially for the West. As we sign up and launch more deals, more projects, we definitely see it scaling up in the West.
Okay, and just general overall demand environment, what would be your thoughts on that, your outlook on that?
So very positive. We have seen very positive traction across the markets. We believe that this demand is here to stay. This current interest rate regime, as far as home loans is concerned, is here to stay. And then the government push in infrastructure is definitely going to drive up the economy towards growth. So on an overall basis, we believe both housing and in next few months, few quarters, we'll also see commercial come back. So we are very, very, very optimistic that we are in a good upward cycle at this point in time.
Okay. Thank you, sir. All the best for the future.
Thank you.
Thank you. The next question is from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Thanks for the follow-up question. Sir, on the commercial projects, what is the potential, rental income that we are looking at maybe from next couple of years perspective? So if you could provide some timeline and some rental potential that could be there, for the company will be really appreciated.
So it's a mixed bag, as I mentioned earlier. But having said that, these projects are just starting to construct, and some will start during this year. So from the point of view of rental income, we are not looking at anything less than between 3 to 4 years to start completing these projects and starting the income from these projects, unless they're of course strata sold. So which is very few. But having said that, we are looking at anywhere between 3.5 to 4 years to be able to see any rental coming from these assets.
Okay, but sir, any ballpark number on that what could be the potential of these projects which you are starting right now? What could be the return?
$1 is a reference point.
Correct. Typically,
$1 per square feet is a reference point. Maybe 10 rupees up and down.
Yeah. Anywhere between 80 cents to $1.2 would be the average.
Okay, got it. And what is the total area which we are going to construct on this commercial side, maybe in 4 years time frame?
So as we mentioned, I think over next 4 years to 5 years time, what we already have in the portfolio will go into production. And then we are obviously, as we sign up the platform, we will scale up the operations.
Okay. What could be that number, and what is the average cost of construction that will be involved in building that, and how we are going to fund that?
So cost of construction is largely around 3,500 rupees a square foot. And as far as the construction is concerned, it's a mix of equity and debt. Our lands are all paid for, as you mentioned earlier, and with the platform, we will bring in fresh equity into the business, as well as the construction finance that is required. And as you sign up transactions, obviously the debt cost comes down, like in all the portfolio cases of commercial.
Okay. And any number that you are comfortable to disclose to us in terms of potential in million square feet for this rental?
It's already mentioned. It's already 6.5 million signed up, and which is going to go into production over next year and a half, 18 months time frame, and then we will add to it.
Oh,
and that is obviously that's something that
6.5 million square feet.
Yes, that is already mentioned. Yes.
Okay, got it, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Abhishek Lodhia from Yes Securities. Please go ahead.
Good evening, sir. This is Abhishek. Just want to understand, what is the difference between plotted development and apartment with respect to economics for the customer and the pedigree of customer choosing it? So basically, I want to understand how much is the customer paying high price compared to the apartment in a same micro market.
So the way we look at this and the consumer profile we have looked at, so a lot of them are families, end users. When we recently launched our Tivoli project in Devanhalli, these are customers who are looking at buying the land and building it over a period of time. They are not some people who will on immediate basis move in there. So the development, once the plotted development is completed, anywhere between 3 to 5 years, they will continue to build on their pieces of land. And from the cost point of view, if you look at it, cost of land and ownership of land is very, very big, because technically you own the piece of land on which you stay. Unlike an apartment building where you are in an undivided share or a society share, as it is in different parts of the country. So in that sense, this is your own ownership of land, and it has its own, unique attraction that the consumers have for it. So construction cost really is up to you, that you decide what you want to spend. So if you technically look at it, one is you have the flexibility of spending the construction cost over time and flexibility of deciding when you want to build it and how much you want to build. And two is that the construction cost is at actuals. You're really not going to pay a margin on the construction cost to anybody. So it gives great amount of flexibility, and that's been the insight that we've learned. Of course, it's very important for these customers to look at the right developer so that the infrastructure and the plots are actually there as they have been designed to be, especially including, the water supply, the drainage, the power, the quality of roads that you do, the quality of infrastructure you do, and the common amenities you create. So that's the important piece, which is where the organized players are having an edge.
So are we also providing with the facility of constructing for them?
No, we are not providing any facility.
Not just selling the... Okay, got it, sir. Thanks from my side.
Thank you.
Thank you. The next question is on the line of Monica Arora from Share Giants. Please go ahead.
Sir, thank you for giving me this opportunity. If we see other players in the industry, in comparison to them, our growth has been slow. What is the reason for that, sir?
So, for us, last 3 years, if you notice, has really been, so about 3 years back, 2.5, 3 years back, we were very heavy on ready-to-move-in inventory. So we had enough ready-to-move-in inventory to liquidate. Our launches were commensurate to the kind of, inventory we had. So you don't want to add inventory when you have significant RTM. So really the focus was to liquidate those. And if you see that over last 2.5, 3 years, we have brought that down considerably from 2.5 million square foot to almost 400,000 square foot today. Which basically means that now we have a significant pipeline of, so simultaneously, as we focused on that, we also built our launch pipeline, because as you rightly, I'm sure, understand that projects in real estate take time to get sanctions, to get launched, go through the RERA approval. So it is land goes to conversion, etc., etc. So we've been at it for a while, and now we believe that all our investments which have been made in land are ready to get unlocked as we launch, and therefore you will see a different kind of growth path that the organization will see. So when you're looking at RTM, it's different. When you're looking at new launches, it's a different cycle you are embarking on. So now we are on that cycle, and fortunately for us, we are entering that cycle when the market's doing pretty well and the growth is there, which will enable us to continue and sustain the growth.
Okay. And so, like, not very particular I'm asking, but on a broader scale, if we see, what is the revenue growth you are seeing for the next, say, 2 to 3 years?
So again, a forward-looking statement and guidance, we don't want to give any guidance, but I'm sure with the understanding that you're getting from the plan, you can sensitize yourself with the kind of personal.
In terms of launch pipeline which we have and are open for sale existing inventory, sustained sale, and the kind of realization we are making quarter-on-quarter basis, which is evident to kind of make estimates what kind of revenue growth we can achieve in coming year and coming years.
Okay. And so what kind of impact the third wave had on our business?
So the third wave really caused disruptions. Early on, somebody on the call asked, why the projects get delayed. And largely in the industry, I think third wave had impact because, one officer fell sick, then the other officer, then the whole office was shut down for some time, and then, departments and so on and so forth. So what happens is, this kind of causes really, this time it has been minimal compared to the second wave, which was really, really difficult for all of us. I think in many ways. First one was, of course, it was a complete lockdown. The second was difficult because a lot of loss of life happened and we were not ready with the vaccination and all of that. This one was, in that sense, there was no loss of life, but only disruption was shorter, but very aggressive, because you had a lot of people falling sick at the same time and isolating themselves and so on and so forth. So, things just become slow to move. That's the only disruption that happened.
Thankfully, it was a minimal impact. And now, pan India basis, cases are coming down, and including Bangalore and Mumbai, the market which we are present, cases are almost coming to an end to it, and economy is coming back to normal, and we hope that this kind of environment will continue and there will be no impact of the COVID any further.
Okay, and so, but just one last question, if I could squeeze in. What is your take on the MPC commodities stance on RE sector, and what do you think the stance will remain same in the coming months, or what?
Are you referring to the increase in prices, commodity prices? Are you referring?
Yeah.
As you mentioned in my opening remarks, we are cognizant about the increase in prices. If you look at our construction costs comprise of 35 to sort of 40-45% of the sales price, and if you say, for an example, even a 10% increase in the cost of input cost may have an impact of kind of 4 to 5% on my margin, and at the same time that is getting mitigated by kind of consistent price increase. If you look at this quarter itself, our increase in realization is 7%. So even if it's a 4-5% impact on the input cost, it is getting offset by the increase in price. And as of now, we do not estimate there will be any significant impact in our margin because of the increase in commodity prices.
Let me add, I personally, in my view, believe that the margins will improve as we go along, because if you just see the overall industry demand supply situation, and you realize that the ready to move in inventory is pretty much over, and the launches are very limited to large organized players or branded and or listed players, and that will ensure that there will be continue to be a cap on the quantum of supply you will have while the demand has picked up. With that background, I personally believe that the margins will improve as we go along over next 1 year as the prices continue to go up. But to answer the question, yes, commodity prices may have an impact, but the continued demand-supply mismatch which we anticipate in next year or so, given the past 1 year and 2 years, in fact 1.5, 2 years, we believe that there is an opportunity to see some appreciation in real estate.
Okay, sir. Thank you so much.
Thank you.
Thank you. We'll move on to the next question. That is from the line of Avantika C. from CSP Capital. Please go ahead.
Good evening, and thank you for taking my question. I just wanted to understand are there any benefits that this budget has for the real estate sector? Could you throw some light on that, if there are any measures that will help the real estate sector?
There is no specific correlation. However, if you look at the government's focus on kind of infrastructure development, government has announced that they will increase the investment in infrastructure or capital investment of 7.5 lakh crores. That will have a cascading effect in the entire economy, and particularly in real estate sector. That way, real estate sector will be benefited. Government's continued focus on affordable housing is proven by the announcement of Finance Minister that 48,000 crore will be invested in the affordable housing. So that gives the government's intention to growth of the sector. Third, government also announced that they will collaborate with the state governments and formulate a law to digitization of the land records as well as uniform sale deed registration process. I think these things will have a far-reaching impact on the real estate sector, and that entire sector will be benefited. That is how we are looking at this budget.
Okay, that's really insightful. Thank you.
Thank you. The next question is from the line of Amish Gupta from JP Securities. Please go ahead.
Thank you so much again for taking my question. So I have a couple of questions on other expenses. So my first question pertains to the marketing expense. What is your marketing expense for the quarter in terms of, say, percentage of sales? And as the sector is on an uptick, do you think it would go up in the coming quarters?
No, I'll explain to you. If you look at our other expenses, 74 crore for the quarter or for the consolidated basis, right? Out of the 74 crore is close to 22 crore is related to the sales and marketing expenditure. About 40 odd crore about related to project, and rest are our general overheads. So other expenses for related to the projects are getting actually inventorized with the project cost, and hence it has no bearing on the immediate P&L for the quarter. However, this marketing expenditure has a bearing on the quarter, and this needs to be looked at my total sales which is recorded for the quarter, not the revenue in the P&L. And if we compare with the total sales, it's close to 4%.
Okay, sir, understood. So, but then other expenses have almost doubled YOY and by say 60%.
On that. See, as I mentioned to you, this includes the project cost, sales and marketing, and general overhead. It doubled because we have taken two big approvals during the quarter. For our Chembur project, we have paid this under this scheme of 50% discounted scheme, which is state government has announced. We paid the premium upfront, about 11-12 crore paid, and saved the 50% of the cost. Similarly, for our one of the project in Ken Vista in Pune, there also we paid the premium cost about 7 crore and saved the 50% of premium cost because of the government's scheme, which was available up to 31st December, then what extended to 31st January. So that increased our the cost related to the project. For sales and marketing costs has also gone up for the quarter. As we mentioned our remark, we have launched two big projects during the quarter, which is one in Bangalore, one in Mumbai. Besides that, the other projects which are in the process of launch, there we incurred some warm-up expenditures. That is what it increased the marketing expenses. And the similar quarter, a year ago, we have not done any launch. We have not done the similar expenditure of approval cost. Hence, the cost has optically, it appears to be doubled. However, it's not. In terms of the sales value, in terms of the project cost.
Okay, sir. Thank you. That does answer and explain a lot. Thank you so much.
So go through our detailed financial statement regulation 33 in the schedule. Entire breakup of other expenses is available.
Yes, sir. Sure. I'll go through it. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you, ladies and gentlemen, for your attention and time. I hope my and my colleagues have answered all your questions. However, if you have any further questions, we are always available for a call and discussion. Thank you once again for joining this call and wishing you all a very happy weekend. Thank you.
Thank you. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.